Hi, I'm John Musso. I'm the CEO and Director of Fixed Income at Cumberland Advisors. It is Thursday afternoon on March 28th. Tomorrow we are closed for Good Friday and the holiday. My running mate, Mr. McAleer, is off today, so I'm handling both chores. This week, quiet week in both equity as well as fixed income markets. But more importantly, we're closing the quarter with an S&P that's up 10% for the quarter. Other indices are also up, not as much. NASDAQ's up about 9%, Dow Jones about 5.5% for the quarter. What we've seen in the last few weeks is a beginning of a rotation away from those magnificent 7 stocks that people always talk about, which are really down to the magnificent 5, if you will. But really starting to see a rotation into more things like basic materials, things of that nature, more value-oriented stocks. And that was to be expected after the run that we saw, of course, in the top level of the S&P, those 7 stocks. On the bond side, we saw for the quarter a pretty decent rise in rates, but it's been pretty docile in the last few weeks. This week we closed with a 10-year bond essentially at a 4.20. It closed last week there. When you start to look at some of the numbers this week, the jobless claims are basically been in that 210 range, sometimes a little higher, sometimes a little lower. That's been printing now for a number of weeks. We're going to see the PCE numbers tomorrow. We know that's the Fed's favorite measure of inflation. The markets are closed, so it'll come a little bit in a vacuum. I think what's important is that this kind of overshoot that we saw in bond yields at the end of the year, where they finished around a 388, we had migrated up at one point this quarter to as high as basically a 435. You spent a lot of the time, though, in the last few weeks between 4 and 4.25. We'll know more as we go forward. The one thing that's very true about this quarter is the market started the quarter thinking the Fed was going to have 5 or 6 rate cuts during 2024. That is now down to thinking about maybe only 3 rate cuts in 2024. And when they start has been pushed out. And why? Because we've continued to see some good economic numbers. We have not seen the slowdown that people think, even though there's plenty of anecdotal evidence out there that things are slowing down. And we have talked about it. As we go into the next quarter, we're going to be looking for, basically, is inflation under control? Are we going to get monthly numbers that are down in the low range? So those 3 and 6 month annualized numbers look good. In other words, preparing the Fed for the way to cut short-term interest rates. They've talked about it. They'd like to do it. They want inflation to basically give them the okay to do it. And that's what they're waiting on. As we also close the quarter, there's one picture we would like to show you. That is one of my favorite pictures, and it's a picture that hangs in my office. And it's a picture of Babe Ruth and Ted Williams taken in 1941 at a Yankees old-timer game. And I like to bring this up because it's the start of the baseball season. Hope springs eternal. All the teams start out 0-0, so nobody's behind. It's always an exciting part of the year. However, we probably started a little too soon when you think about it at the end of March. You've already seen games canceled in the New York area and Philly area because the weather's terrible. And the poor fans out in Chicago, they'll have an opening day where it's in the 30s and snowing. And if you're a Chicago White Sox fan, you would say, haven't we already suffered enough the last few years? But in any case, we hope that everybody has a nice weekend, and we look forward to talking with you next week.